What's going on, guys? John here, and going to be going over these Apple calls we bought today. So we bought the Apple 180 calls today at around 11 a.m. So just going to go ahead and show you that time. So right in here, right around 178 exactly. You can kind of see this is after the earnings sell-off. So it doesn't really look like there was any reason to buy this. It could have just easily gapped down earlier, but we're going to go ahead and show you kind of my thought process behind it. But before we do that, just want to let you guys know the first members only video has been posted. So it's about high versus low probability setups. So if you want to view those, you can view it as many times as you want. And I'm going to try to do the 2 weeks, upload a video every 2 weeks. So it's tailored to you guys, what you want to learn more about. I post polls on, we can vote on, and all learn a little bit of something together. But let's get into Apple. So Apple was kind of a similar idea to AMD, where it had a bad earnings reaction and sold off, but it tends to kind of keep getting bought up once it gets near those lower levels. And I'll show you what I mean with AMD first here. So here's the AMD. Let's just clear everything out that I had. We can leave that there. Let's go to the 90-minute, and we'll show our extended hours. So here, AMD had a little move up and then big dive down after earnings. Had a little bit of consolidation there, and then had a nice few candles taking it off. You could have made huge profits, 108 all the way to 114 before even going to 119. So I'm hoping we see something similar with a retracement on Apple. All right, but let's close that after hours and just look at the regular time. So you can kind of see where all these wicks down happen, and you get this interesting buy zone where, okay, kind of 109, and let's really make it about 107 flat. There's just going to be an interesting area here where these wicks down keep getting bought. That basically tells you someone's sitting down there with orders, and they just want to, that's where the stock price is interesting to them, and usually those are investors with a lot more money than you and me. So those are usually good points to keep track of. So I always like to see the big wick down and say, okay, that's kind of a zone of interest, and I want to be prepared for it. So that's what happens with AMD. They had the bad miss, wick down to kind of the zone of interest, bought the dip, and it popped up. So same thing with Apple. Let's go ahead here, see what we're looking at. So zoom out, and then you'll kind of see, oh, okay, there's a lot of activity kind of right in this area here, and I wonder if it lines up with this area here. So there's our consolidation, and then look at that. So we had some nice consolidation going on there, and I was prepared today to buy it all the way down to 177, just because that's kind of where I think those wicks might have been even a little bit lower, but my number was 177, but I bought on 178 at 11 because it just kind of, SPY was down over percent today at one point, so it was down like 1.3, 1.5%. But Apple was basically flat most of the day. So there was some relative strength in Apple today. Like Nvidia was red, AMD was red, everything was red. Apple was literally the only green stock I saw, or almost green stock I saw. So I said, okay, something's up here. People they're not selling Apple anymore. They don't want to get out of it anymore. So that's where you go, okay, how can I use this to my advantage? And then I joke, and I kind of gave a little joke here, a little tease. Let's see if I can pull it up, joking about the boomers. So, yeah, I said boomers will eventually notice Apple's is down $20 from high. So if we get any sort of retracement here, like you're not going to call for the gap up to 187, but literally, yeah, Apple had bad earnings, but you have an iPhone. Your dad, your grandpa all talk about Apple. Kramer talks about Apple. Everybody talks about Apple. Eventually, someone's going to say, okay, this is good enough. And we're not long-term investors here. We're just weekly options traders. So if we can kind of get that nice bounce, that's all we need. And the same thing. This was a straight shot down from 183, 182, all the way down this 178. So just take it off the wick. 182 could happen pretty easily if we get a good move tomorrow. We saw it today, 178.5 all the way back to 180. If we get 180 to 182 tomorrow, our calls are $2 deep in the money, likely a triple, and the risk reward was really good. Like I'm never gonna, if I buy something, I'm sizing myself in where if it goes to zero, I'm okay with it. But this, I feel like you could have got out if it went lower. You can do whatever you want, but I felt like, hey, this is worth a chance here, and it ended up paying off really good. And I guess the big takeaway was we're still kind of in that buy the dip market. The uptrend is still big. So until we really start seeing the set, like you might think the news is crazy, you might think the Ponzi scheme's getting torn down, world's going to oblivion, but it only happens once. So I hope kind of this quick little synopsis helped. If you have any questions, feel free to comment them down below. Comment on Twitter. Again, you guys are all epic for following me, enjoying all the memes. You make trading fun. So I'll see you next time.